Let's get rocking. Why don't you give us an intro and elevator pitch on Doug and what all you're working on, and
Yeah,
we'll jump into it.
absolutely. So, by way of background, I'm Doug Speight. I'm the founder of a company called Annex Tech Partners. I have a background in not only tech startups, so Annex Tech Partners is my fifth, but I also have a career in technology commercialization. So that means taking innovations and inventions out of research environments, so primarily the university research environment and federal laboratories. So I worked as director of tech transfer for North Carolina A&T State University, for NASA, for Department of Energy most recently, taking innovations and spinning them out either as licenses to corporate partners or as startup companies. And so I've done that for just about all of my life. I moved back to North Carolina in 2016 to serve as entrepreneur in residence at American Underground. So focusing in on diversity and inclusion and increasing Black and Latinx participation in the startup ecosystem. And that carries through in everything that I do now. Everything has a diversity and inclusion thread for me. For family reasons and for obvious economic reasons now. So that's me in a nutshell.
Yeah. For the Annex business, do you want to talk about kind of what that is at a high level?
Yeah. At a high level, there are two trends that are occurring in the tech industry. On the one hand, you have a number of corporations, tech corporations that have been on acquisition tears for about a decade now, just after the last recession. For instance, companies like Facebook, Amazon, Microsoft, Google have acquired over 530 companies since 2010. Just in those five companies, just between 2010 and 2019, the end of 2019. Not all of those acquisitions have been incorporated and integrated into the larger corporation, and many of those acquisitions are either sold to private equity, or in some cases, they're actually wound down or shut down because they haven't met corporate growth standards. In many of these cases, these acquisitions and these internal startups are saddled with unreal expectations in terms of growth trajectories. And when they don't meet those unreal expectations, they're undervalued and are essentially discarded in divestitures and sales to private equity and other companies. So on the other end of the spectrum, you have a number of very talented Black and brown founders, technicians, engineers, sales professionals, and others that are having a difficult time getting into the tech industry. So what we did as Annex Tech is bridge those two worlds. One, the corporate environment that has non-core technical products that don't meet their growth trajectories and expectations. And on the other end, you have people of color and an entire pipeline of extraordinary talent that's very difficult, finds it very difficult to connect with growing tech companies in the industry. So we actually bridge the two by helping the corporations to divest of those companies, and we form a new company around it that's populated with Black and brown talent.
That's awesome.
Yep.
And how's that going to date?
It's going well. It's going well. So interestingly, obviously today is June 17th, and we're in the middle of a pandemic. The last several months have been somewhat quiet as many of these tech companies try to regain their footing. So the process has been slowed down a tremendous amount as they do some internal portfolio review and portfolio assessment. And over the last month and a half or so, it's picked back up again significantly. And so we have a number of conversations now with tech companies all over a billion in annual revenue that are looking at their portfolios and saying, we have more product lines that are outside of our core area of expertise, and we need to shed those. So they either try to sell them or they engage companies like ours to divest.
Yeah. So, I mean, I think, this definitely feeds into the next matters most kind of theme. You're innovating on the model, you're innovating or iterating on traditional venture capital, on talent, collecting talent, putting them to work, deploying them, with D&I as kind of the heart of it. But before kind of getting into that, you said, as far as Doug is concerned, diversity and inclusivity is part of everything you do.
Absolutely.
I talked about that, and also, thinking about things like people, knowing your own story, and like being an entrepreneur, like knowing your own story is powerful. And I'm just pulling all kinds of cliches out my ass, but and what's your why, right? So we're gonna do both, so shape that up for us, because I mean, I know you, I know you're on a mission, and I think this is an amazing opportunity for like just macro everything lifting up, but start with your kind of your story, your why, and how you.
So my why actually starts 3 generations ago, 1938. So I come from an entrepreneurial family. My grandfather started his first company in 1938 in Durham, during the period where it was referred to as Black Wall Street. So back at the turn of the century, Durham, North Carolina had the highest density of Black millionaires per capita in the country, of any city in the country. And so it was called Black Wall Street because of the prosperity of the Black business community, and given how prolific it was within the city. And that changed over time with a number of controversial policies, urban redevelopment that displaced businesses and ended some. And that ended an era of Black business, scalable Black business in the city of Durham, that I think affected the local economy for decades to come, and was largely undervalued in terms of what it contributed to the overall economy of the Triangle and North Carolina. So everything that I do is about recreating the effect of Black Wall Street in the digital economy. Tech industry in particular, and Nick, we talk about this all the time. Tech has an ability to scale wealth quicker than any other industry, and I believe that incorporating underrepresented communities into the tech ecosystem will help them scale generational wealth at a far more rapid clip than they have, and that's very important for the being able to solidify our local economies and regional economies, state economies, and also the nation.
That's awesome. And that's a stat I didn't really know, actually, around sort of the highest density of Black millionaires per capita. Mm-hmm. But we've got, well, actually talk about sort of the kind of the rituals and traditions around Black Wall Street that seem, it's been here for a while and documented for a while, but it seems like the last few years, there's been sort of a refocus and a new energy around the celebration of that tradition in Durham specifically.
Absolutely.
And it is Durham specific, but obviously it's bigger than just Durham and just the Black Wall Street.
Completely. So as you mentioned, there's been a resurgence in the interest in Black entrepreneurship, and that's nationwide, and that has been the case for now about 6 years. So I think for 6 years running, the SBA and other government organizations have said that the fastest growing demographic for new company starts is Black women. followed closely by Latino women. So that has been a trend over the past 5 years or so. And what you're seeing is more people realizing that the opportunities for truly creating wealth within the corporate environment is relatively limited because of racism and glass ceilings, sexism, and the like. So you're seeing more people strike out with side hustles initially, and then going out into entrepreneurship. So a couple of years ago, several members of the Durham community got together to create what's called Black Wall Street Homecoming. It's an annual celebration of Black entrepreneurship, largely focused on tech, but not exclusive to it. It includes ag tech, it includes fintech, and a number of service industries. And what we do is host 3 to 4 days of celebration in the fall of every year. So in late September, we'll recruit some 4,000, or we have recruited over the years, some 4,000 attendees to come to Durham to hear speakers and panelists and specialists and meet investors over that time. And at the same time, we've also received funding from Google to stand up a program specifically around supporting Black entrepreneurs in tech. It's called the Google Exchange for Black Founders. That's an annual program that happens at the very same time. So there have been a number of movements like that in the Durham community over the past 3 to 4 years, and that momentum is continuing.
Yeah. Nationally or regionally or nationally, how do you see yourself, and how is this, are you one of one person saying, hey, I'm changing a new model and this unlocks social value, commercial value, the returns are holistic, but it does include money, includes employment, GDP. Are there others doing this? I mean, it seems obvious, right? There's what an untapped potential to check, to serve a lot of different missions. Mm-hmm. Is this obvious to everybody, or is it are you one of one?
Great question. So it's yes and no. Yes, in the sense that there are other entities, private equity firms and others that are looking for some of these underutilized assets inside of corporate portfolios, but their focus tends to be purely financial, right? So they're looking at, how do I acquire an asset that's currently operating, currently generating significant revenue, has a significant customer base, is a profitable and growing industry sector? But the transaction is purely financial. That's where we differ, because we actually tie our mission, our economic empowerment and economic impact mission, in with the corporation's corporate and social responsibility goals. So most corporations have a CSR group, or corporate and social responsibility, where they look at how they can provide impact within their region or their city or within their state. And often those investments come in the form of a check to a nonprofit organization. Well, this is a completely different way of looking at it. This is taking some of your operational assets and deploying those in a way that creates an opportunity for job creation and scale and wealth creation in underserved communities. So we're very unique in that regard.
Yeah. Well, that's incredible. And I think that speaks to it's nice knowing unicorns like you, Doug. So yay. Yay for me. I know awesome people. But it also speaks to, that's kind of like sad that there's just not more activity kind of happening in the space, but you're leading the way. So when you're leading the way, you have a big lift, right? You've got to sort of sell all these different pieces on why all these things together make a difference. Correct. What's that vision? This goes into sort of next matters most. Like, what is that vision? And I've got a couple parallels too that I'll bring up, but like, how do you see that kind of vision for why this should matter to your audience, your stakeholders, your potential targets, how are you selling that big picture?
Great question. So my ultimate vision is to create the PayPal mafia of Black and Latino entrepreneurs in tech. And what that means is actually using successful exits and a series of successful exits to help create economic wealth in communities that have been largely overlooked. The ultimate goal is to create more economic contributors within a region, within a city, within a state, and then scale that over the entire country and well beyond. And we do that by taking some of these assets that are typically discarded by corporate America due to nothing other than their patterns and practices. That's value destroying when they divest of profitable business units in the way that they've been trained to do. And this is actually taking some of those assets and actually creating economic impact, true economic impact in the communities that have been largely overlooked. And when that happens, the economy of the entire region increases. It's stabilized in a way that it's not when it's imbalanced. So that's the ultimate goal of what we do, is to create more economic participants, create more generational wealth in those underrepresented communities.
Yeah. So, I mean, I think that addresses definitely two, maybe of many pillars of this, but obviously it's got value to your target in terms of the company. They're going to throw it away anyway.
Right.
So let us come in, be hungry, scrappy. That's sort of like, that's race agnostic, but the piece of, hey, we're going to actually intentionally focus on inclusivity and diversity, that adds this other layer of GDP growth is great for GDP and economic prosperity in any community or any city, or as a kind of from a state level is good, I guess, right? Like, oh, the state's better. It's more tax revenue, more happiness, more stuff that can fund roads and schools, even though it never seems to come back around to schools. But specifically for marginalized and underserved communities, that's like a double bonus, right? So like you already had, a need to find ways to bridge the gap in terms of equality over time. And so it's serving that. How about the glue that's going to bring these things to head, like, in terms of fundraising, investing, like how does that party to this fit in and see that same sort of multiple bottom line kind of return?
That's a great question. So what you're seeing across the country now is a move to impact investing. And that's true across the venture capital industry. That's true across the not-for-profit foundation community. That's true across corporate foundations. They want to see the deployment of capital or capital deployed in a way that creates economic impact in ways that it hasn't in the past. And this is a relatively new movement for some companies. There are foundations, corporate foundations like Prudential, for instance. The insurance company, Prudential, has been an impact investor for decades now. They were one of the pioneers in the space. And you're seeing more and more investors pour into this community and this movement, because they realize that many of the returns over the past few decades have been one-sided. All of the value from an exit of a tech company typically goes to the investors primarily, and then to the first four founders of the tech company. And there's a huge drop off for that fifth employee and everybody else in the company. Essentially, they get what equates to a severance package, while everyone else makes out millions or better. And this is an opportunity with Annex Tech Partners to change that calculus, so that the returns are not just weighted towards investors, but to the actual participants and people that create value. So we've allocated more of our cap table to accommodate our employees, so that they're also owners of the company, and they're further motivated and also benefit from that company growth and the eventual exit.
Yeah. Well, I think, and so I guess the way I was also connecting the dots as you were speaking was, this might be a fund, it might be, and so, one of the challenges would be, well, okay, you don't want to be getting nonprofit foundation dollars. I would actually ask you if I mean, you might, but I would see how you're like, no, this isn't a nonprofit. That's like, could almost be insulting, right?
Correct.
But it doesn't, but like but each LP or each fund has LPs, right?
Correct.
So there still is sort of the grassroots movement of saying, hey, like if I'm going to invest into this as a fund, I want to see like a diversity of thought and of mind and of companies that we're building. So like commercially, that fund does have, some supply and demand of like changing their pitch and their approach.
Absolutely.
In a way that, can like, because with more money to deploy, they have more money to drive return. They can drive more absolute profits. They're only going to get said money if they take the right investing approach. So I mean, there is a way to get maybe to the investor of the funds.
Correct.
To say, so I can, that's really interesting. And where does it all lead? I mean, just utopia? Like, how does that all, we're all like, ... perfect
right.
world. Shit, okay.
That's a good question. So starting with your point around mission alignment, right? That's such a critical component of it. Having both institutions, not-for-profit and for-profit institutions that understand the value of stabilizing our national economy, particularly in underrepresented communities. That's a key component to all of this. So your point is correct. We don't want grants. We don't operate as a nonprofit. It is insulting because this is, at the end of the day, all about commerce and business and building value. But what you're seeing is the tenor change with many of those institutions from granting organizations to investing organizations. They really do want to see a material change in how business is conducted, and those are the types of partners that we seek out. Where this is all leading, quite frankly, is a new generation of leadership in the tech industry that is Black, brown, and female. We have set goals for each of our companies where we want each of these companies to be 60+% minority owned, 60+% people of color staffed, and 60+% women ownership and women presence within the management team. So we have very lofty goals about creating pathways for populations and individuals who have been largely stymied in terms of their growth and their earning potential in larger tech companies. So ultimately, it's seeing those people experience the material outcomes of an exit and then go back and do it again. We see this as the flywheel effect. Obviously, it's taking a lot of, as you said, activation energy on the front end to get the flywheel going. But ultimately, this will produce more exits, companies growing at a faster clip, and more people that are exposed to high growth, high impact operations internally, and they're growing in terms of skill and responsibility, and they're going and spinning off companies or moving to the next company, and it creates a positive churn within the community.
That's right. Yeah, I love the flywheel. And it's almost, I want to make a comment and see what you're thinking about this, which is, if a fund or a firm, or, if the market is not taking a proactive stance and a proactive strategy and approach to understanding the future, like whether you can see exactly the ROI, because I think, you could also make the case that, hey, a Black and brown leader is just as good, if not better, than like a white male leader. Mm-hmm. But it's not necessarily saying they're going to be exponentially better. So if we're just looking, and once we get there, we need to also manage our returns as a portfolio.
Absolutely.
And so, like, it's saying if you don't have a focus on inclusivity and diversity, you should, or arguably should, probably get left behind, because that's almost saying that you don't care to focus on it. But at some point, there's also like, there's the appropriate amount of proliferation of funds and mindsets that, what point, how many years out is it to where it's not a focus anymore? Is that 50 years out? And I'm not trying to make it about myself here, but like, but I like like I'm comfortable with this fact that like I've always liking the abundance mindset, like let's grow the pie, but that's not fair. That's almost being apathetic towards diversity, right? Because like, hey, if you're doing better, if this community's doing better, then like, hey, we're all good. So I'm definitely going to help. But like my mindset has to change. Like I actually maybe need to be more proactive about doing shit. Cause just being like, hey, it's all good. Like, no, it's not all good. Like if everyone in every function was like me, there'd be all good. But there's other systematic things that I'm just not even a part of that I don't know how to change that because it's too big, it's beyond one person. So therefore, as a society, we do need to kind of say, hey, there's too many pieces of our economy and our social fabric that are like broken that need re-stitching together for the benefit of greater good. But what I still know that it's always better running towards the light. It's always better, you know, getting the bees with honey. So like when you have to cast that bigger vision, what does that look like? You know, is it, you know, this isn't about this comes from this pie, it's coming out of your pie. It's really like, no, we're making a bigger pie. But
Absolutely.
that takes time. So what's the realistic kind of timeline that you see on that?
That's a great question. And I'm not exactly sure either, right? And I'm not certain if it is a timeline or a continuum. Right now, obviously, we're on the polar opposite end of the continuum. 0.0006% of venture capital of the 152 billion dollars in venture capital spent every year goes to women. Or Black women. Yet at the same time, it's well documented that women founders generate a 30% higher return than their white male counterparts. So there is a huge incentive for venture funds to start truly looking at women founders, and in particular, Black women founders, right? A tremendous amount of incentive for them to start doing so. But if you look at where our baseline in that regard, like we're starting with a fraction of 1%. And even if that the amount invested in Black women founders increases 10,000 times over the next couple of years, that's still low single digits, if that, right? So that's pretty difficult to try to project over the next couple of years how fast, what the rate of increase will be. So in some ways, I'm optimistic about the future. I'm optimistic when I see Andreessen Horowitz and many of the like blue chip venture funds setting up funds specifically for Black entrepreneurs. But on the other hand, it's a drop in the bucket compared to their main funds. And it's to some degree an insult that you set aside 3% of your total portfolio specifically for Black entrepreneurs when we should be a main part of your investment thesis for your main funds. So I waffle back and forth in terms of what the timeline looks like. But I do know that the traditional model of investment needs to be disrupted as well. And that's where our business of working with divestitures over time changes the calculus of who benefits on exit. And thus, it has to change the way that the venture industry looks at how they invest, how they benefit, and in some cases, maintain an outsized advantage in terms of the versus the founders. All of that has to change. The entire mindset has to change. And largely the only way that'll change is when people realize that they're missing out on value creation.
That's right. Yeah. I mean, I acknowledge that even the question of is there a timeline might not be a fair question, but there is probably some definition of parity that exists out there. And so it's like that parity, shit, if it comes in by next year, that's great. But to your point, like there's a long, long way to go to get there. But parity and equality are words that maybe are these things to strive for, but those are going to look so dark or so if you just look, I mean, based like it's high level, it's like, oh, it doesn't seem that unachievable, it's X amount of VC. But when you look at it relative to where it's going now, it's like, I mean, you can't even multiply 0.001 times anything, it's going to keep going the wrong way, right? So it's like you got to make humongous strides in that regard. And I think, you know, to that, like it's I mean, what's the balance between it's the right thing to do and it's commercially a better idea? And that commercially better idea does have a social component, but it has a return component. How do we make sure we sell that just so it's out of the way? There's going to be a return, but also if you don't do it, you're missing out on social stuff. You're eventually going to be on the wrong side of this big trend and this movement. That's what's right for the country and the world. So then you're totally fucked.
Absolutely.
So like, obviously don't just like go out of business for not making the right decisions, but like, what's the return? You said a stat. So, I mean, I'm sure there's a lot of stats around making investments in the right places.
Absolutely. Absolutely. And when you refer to investments, you almost have to break it down into a number of different categories. Typically, investments is discussed in the context of direct money in, right? Equity investment, direct checks to startups and the like. I think we need to broaden the definition of investment. In the same way that we engage corporations for these wholly owned product lines, what we're finding out is that the corporations are saying, you know what, we still want to remain vested in your success. So we'll license you the technology. We'll work with you to spin it out as a freestanding company. And we'd like to maintain an equity position in it and connection to our corporate parent. So we're seeing companies that realize, oh, this isn't just a toss it over the fence and good luck with it, but we want to ensure that this product and this team and this movement continues. And that's reassuring in a number of ways. So I think it's part of the challenge is redefining what we see as investments. It's not just financial capital in one transaction. It's an ongoing partnership where value is created, and that can happen in a number of different ways. So I think that key distinction is going to be important to change the industry's mindset going forward.
Yeah. I mean, I'm just trying to think of, I'm picturing this scenario where you're just like, just money is just flowing to you and like faster than you can like even catch it, right? Because of all the things that you're tapping on there, which is there's a return to be made, there's models to be changed, you're on the front edge of that kind of like model, not only from like you're making something out of nothing, it's going to be a discarded asset possibly, or it's underperforming. So that whole like how you invest, that's sort of like build versus start, or like build then start. There's a book that I think I just bought on my Audible, which is like, buy then build.
Yeah.
So like about entrepreneurs who maybe buy an existing thing versus starting everything from scratch. And that's still entrepreneurship. So you kind of
completely,
and you're trying to add sort of like the return, sort of IRR on that, different way to set up cap tables from the start that improve quality of outcomes for everybody. And a keen focus on, the makeup of the staff around diversity and inclusivity and of leadership and ownership. So I think like, there's also how do you quantify what I kind of call as like the holistic or the social good of this, like a public good? Like it's great to get a sidewalk or sidewalks, public good. It's good for everybody. But like from an economics perspective, it's like hard to put that on one person to say, build your set of that road, so how do you help people understand that and capture the value that you create in that realm?
That's a great question. So we focus in on the individual economic impacts to participants in our companies. So this is an ongoing conversation. The way that we look at it as the leadership team is we want to close the wealth gap, the salary gap, and the opportunity gap. We want to close the wealth gap in that we want more employees of the company to own and hold equity positions that could be of material benefit on exit, right? We want to close the salary gap in that we want to launch into these companies. We want to create them with complete parity in terms of compensation. That's a huge issue in the tech industry now, with women earning up to 30% less than their male counterparts, Black men earning 15% less than their white male counterparts. And a lot of that is based upon when they come into the organization. They're coming in so late that those sorts of gaps are already in place. So by creating the type of culture and structure that allow everyone to chart their compensation against industry established norms, it gives us an opportunity to close that salary gap. Opportunity gap in that we find that most Black, Latinx, and female people in tech are not invested in terms of their professional development the way that their counterparts are. And that's a key part of what we do, is focus in on how are we creating avenues to grow in skill and responsibility. How are we creating avenues to train people in new skills, whether they be management or technical, so that they are growing in marketability at the end of the day, and that we're seeing their progression from when they first join the organization to when the organization exits. And so we're charting those over time to show that we are indeed helping individuals grow their net worth, that we are indeed positioning them well according to national standards in compensation and salary, and that we are also helping them grow in terms of new skills and marketability.
Yep. That's awesome. And I think what I was in my mind when I asked that, I was like, well, you know, all companies in this area are better off. All people are better off when we have more parity, more equality, more just societal well-being. So, you know, maybe the government should be capturing that, and that's where you potentially could be looking at, you know, a public-private partnership or public funding to say, hey, like, if my taxes went up, to say, hey, it's going to be a better and more happy world versus what it is now, I'd pay. You know, I think most people would pay, even if you want to, even if you're trying to like live off the grid. There's some value to saying, okay, motherfuckers aren't going to try to come get you, including the government.
Right.
You know, like something's good. If everyone's happy, the government, like, you can live off the grid.
That's exactly right. Yeah. And I'll actually push that forward too. I mean, you look at elements of the community that aren't typically publicly funded, or at least not funded well from the public regime. So your arts community, like who stands up to support your arts community right now? The way things are is that a lot of that burden is carried by very wealthy white men. And being able to create more economic contributors from people who both benefit and value the arts community and what it creates is another one of those outcomes. We want to be able to track, what are you doing in terms of contributing to United Way or the Arts Council, or name your interest area. All of those creates a different type of civic engagement that we also want to see. We want to increase that over time.
Yeah. So one of the things that I was gonna kind of ask one way, but I figure this would be different, is since we know each other pretty well, I'd say, you know, give me I don't know if it was a 360 review, but like I made some comments earlier. It was like, yeah, you know, this is good. Like, I think I'm doing okay. You know, I'm doing my part well, but then I'm like, well, no, I'm not. So if you had to be like critical or you know, give like, if you had to reflect back to me what you're thinking about me or my participation, or whether it's people like me or just literally me, poke some holes in the things that I said, or that, you know, like, maybe, are you doing this? Are you doing this? Like, help me understand, and maybe others can kind of get that sense of like where they're maybe deficient, or I'll just stop there. But this is your, man.
Be careful what you wish for. No,
I know. I knew it. I'm excited.
So,
broke moment.
So I do value that you and I are very mission aligned, in that we see the value of growing the community, growing the pie, an abundance mindset. as opposed to a scarcity one. And I think that basic paradox between abundance mindsets and fixed mindsets is an incredibly important one for a community to come to grips with. Largely because when a community has a fixed mindset, they are going to make a mental calculus in everything that they do, whether they realize it or not. They're going to make a mental calculus of, if I participate in seeing somebody else progress and move forward and grow in prosperity and abundance, then somehow that comes out of my pocket. You and I know that's not true, right? And it has never been the case. So I think starting with coming to grips on that abundance mindset versus fixed mindset is a very critical one for everyone individually and for cities and municipalities and regions to deal with. Because you treat resources and you treat your time, investment, and effort very differently depending on those two mindsets. Right. Number two is thinking about how you view personally how people view other communities and the role of public institutions in engaging or managing those communities. Let me be really specific. I was watching a peaceful protest the other week. High school students had organized a peaceful protest, took place on a major thoroughfare, and blocked traffic in one direction to carry a very important message around social equity and social justice. And the interesting thing was I observed two different responses to that protest. On the one hand, there was a parent that was extraordinarily proud of those high school students for organizing a peaceful protest and coordinating it in a way that was both respectful and also got the message across. There was another parent, however, that was completely perturbed by it. And they were asking the questions, where are the cops? Why are they not arresting everybody? Like, what's going on here? This is chaos. Those are really two incredibly different ways of looking at the power of our institutions, right? One is looking at the police as a keeper of the peace, right? Primarily a keeper of the peace, a keeper of order, and a facilitator of the public discourse. One is completely punitive, right? We look at the police force as, our attack dogs, for lack of a better term, to go punish those people. That's a very fundamentally different decision that people make, and sometimes they make it subconsciously. We all need to understand which way we view those institutions and their role in society. And that's one very important way. I think all of us need to revisit how we think of our authorities, our municipalities, our leadership, and so forth, because both of those require very different resources, very different methods, and the outcomes are entirely different depending on which way they go. So I'll add that to it. But ultimately, it's really the most valuable thing that all of us can do is reevaluate our biases, our prejudices, discrimination as the precursors to racism. And many of those words have been lost in the American lexicon. We don't use that hardly anymore. And we find ourselves in a conversation that's either allies on one end of the spectrum and racists on the others. And there's no dialogue there. But if we look at it through the lens of bias as a foundation, and prejudice or prejudging people in the absence of any information, discriminating, just simply treating people differently, some better, some worse than we do other people for whom we have no biases. If we look at those things, it's easier to isolate behaviors. So for instance, if I say, Nick, hey, you're a racist, your response is, no, I'm not. And the conversation is over, right? There's nothing to talk about. But if I were to come to you and say, hey, Nick, we've gone out to lunch several times, and I think you might have a negative bias towards Asian women. You know, whenever we're in the company of an Asian woman, you react a certain way, and I observe this. You know, talk to me about that. Like, let me know what that's all about. Then you actually have an avenue to say, hey, I didn't realize that, or no, that's not the way I see it. Here's how I see it. And it opens up the dialogue a great deal. So I think that is a key component of what needs to happen with everybody across the board going forward, is having the language and a framework to understand our own tendencies and how to evaluate and break those down. Sorry, that was a long answer to your question.
Yeah. I was expecting a laundry list, though, of things to improve constructive criticism. Okay. I think one of the things, though, that I don't know what this really does, but I feel like there was a time when you didn't say race stuff. You didn't say that person is Black, because for some reasons that was right, because you're like, oh, that's drawing a color barrier. You know, it's black and white. That's not that simple. Like, oh, that's I'm white, you're Black. That was not cool in terms of how we get to like racial harmony. But then I heard this, it was like just ESPN's dude talking about Tom Brady being like, oh, they're like, how do you feel being like this old, like super rich white guy in this locker room? Does this feel weird? And he's like, oh, I don't see race. And I was like, I think that's what we were sort of maybe taught to say. But then the guy was like, well, that's bullshit. Like, that's being ignorant a little bit. Like, well, obviously there's race. So you not seeing it is you electing to feel better about not seeing it. So I think that was one of the things that were right in spirit, maybe, that aren't necessarily wrong. We don't want to be like, I immediately see a thing that's different in a negative way, but we do need to actually say, wait a minute, there's other things that go along. Seeing race for like, I'm going to make a prejudgment is bad, but acknowledging that there are different races or different types of people that have different challenges, I think is sort of what we need to what we are reintroducing, or needs to strongly be in everyone's mind. It's not like, oh, it's all good. Like, it's easy for me to be like, I think it's all good. Like, I'm not doing anything bad. Does that make me by default fine? Like, no is the answer, right? Like, just not hurting the situation isn't enough now. You got to be like,
sure,
you have to see race. You have to be like, you have to see inequity in other race or gender or orientation, et cetera.
Yeah. So that's a really good point. And there is a really distinct difference between the leadership of a company saying, I don't see color, and even if they say and use all of the popular diversity and inclusion jargon, if they're simply tolerating differences and diversity, if they're just saying, yeah, it's fine if we have, people of color, yeah, we're okay if we have more women to come into our organization, that's very different from saying, hey, I recognize that you have a very different perspective, you bring different skills, and I actually crave that. I want that. Like, I am after those differences. I see value in those differences, as opposed to, yeah, I'll deal with it. It's fine. Those are two very different things. And I think that's what corporate America is really struggling with right now. That's what the tech industry has been struggling with, because there has traditionally been comfort in homogeneity, right? Oh, you went to the same, business school as I did. Oh, well, there's a level of comfort there because I know how they taught. And oh, you went to, the same, Catholic school or what have you. That's all about comfort level, as opposed to challenging your notion of what brings value. And I want to see more companies follow our lead in saying, I want all of the differences that will give me an edge in business. And that's a core thesis of ours.
Yeah. So for the sake of time, I'll try to be, brief on the next points, but that's a great point. When I earlier referred to, like, there's this other parallel that I was thinking about, I had a conversation with a guy who's a mental health expert. Mm-hmm. So in saying, like, why should employers, because there is a challenge as a small business owner and an entrepreneur to like address all the things and all the needs of society when, you know, at the sometimes perceived expense of your own bottom line. And sometimes it's not really at your own bottom line. It's really like coming out of your own pocket. And like in a small business of any size, or we could be the most equitable small business, there's still a lot of pressure in finance and financial collapse and ruin, and your marriage and your kids hate you, and all that shit you thought was the whole point of society and life is procreation and extending the human race. It all goes down the toilet. And so you're like, damn, I do want like mental health. It's like, yeah, I want more wellness days and I want to pay a person to do meditation for them. But I'm broke, man. Like I got to make payroll. How about this? Do you want to get paid, or do you want like a fucking Zen day? Or a nice new garden in the backyard? Like what is it? Take your pick. Like, so I want to find the right way to get to the small businesses who are like, make it about the growing pie, make it about the abundance. Cause I face those decisions in like mental health. Like I'd love more benefits. I'd love more, all this stuff, and a more mental resilience, emotional resilience, mental resilience, well-being will create basically a better population. I'll be happier. If we're happy, we're probably making more money. I'm worried less about like, oh, what's going on with that? It's all like, oh, like what should I do with my time? How should I, and I think, and for that conversation and this, like, there's a component where it's like, man, painting that future picture will definitely help the cause, which is and what I said to this guy's name's Don, and we did this, and I love Don. He's awesome. It's like, is mental well-being, emotional well-being, like the next big trend in business? And really, I think this is too, like, I don't even know if this is called diversity and inclusivity or how you would phrase it, but like, this could be, there's like Enneagrams and DISC and like knowing how to communicate. These small things are Six Sigma or the next big thing in business. Like that's tiny. That doesn't mean shit, but that's still, people buy that because there's like a product market fit. Like, oh, if I do this, I'll get a system and I'll improve my business. And therefore, ... Mental health of your employees, of your team, and builds up the community. Diversity, inclusivity, rebuilding the fabric of our society. Like, how do we tie that down to a micro level to that small business owner to be like, do this, like, hey, if I could increase your profits by 15% a year, would you take this magic blue pill? Yes, you would. Like, boom, take it, sold. Like, if you were drowning, and I threw you a life vest, would you grab it? Great. Hey, take the deal. Right. So I think, how to tie that together on the high level and then bring it right down to Main Street America, who's, I don't know how I'd rate myself, maybe like better than average on this, but most people don't even know what they're not even doing.
Very true.
You got to sell it to them. And that's a lot of people. Like, I'm always surprised at how many just other people there are out there, like, that are just not thinking about shit. Like, they're just not trying to advance the world or advance themselves. And that's like punch in, punch out, or I'm just doing this my own way and not trying to seek knowledge. And that's probably like 90% of the world, like, sadly. So
I agree.
How do we get to them,
Yeah, good question. So I just read a Boston Consulting Group study a couple of weeks ago that said that for companies that had diverse leadership, they experienced a 20% increase in revenue compared to their peers by innovation. Right. So those companies are more creative and innovative than their peer companies are. And thus they see a 20%, advantage in revenue and then corresponding, obviously, enterprise value. There is a push to quantify those types of benefits now from diversity and inclusion and what they mean to productivity and what they mean to innovation. The mental health component of it, I think, is no different, right? There is a productivity enhancement benefit that comes from mental health. When I look across the evolution of the tech landscape over a number of years, I see many of the women and people of color that have entered the tech industry are typically not entirely there as a whole person. And the reason for that is I think there's an expectation from white male leadership to be that you should be just a black version of me. You know, essentially, you should just be me, only in a different skin, and that is incredibly limiting when it comes to potential and when it comes to productivity. There really needs to be a complete mind shift to say, listen, those differences that make you different from me are a superpower. I know that there's a 20% premium that I'm giving up by not having that type of perspective on my leadership team or across my employee base. So that's where the shift needs to take place. I think more people need to realize that.
Yeah. Agreed. Would you say, is like, if I was titling this or trying to like make a headline, would it be, you know, business and entrepreneurship is a key, or the key, or is a key to rebuilding a racially equitable America? Is that sort of your, like, does that belong in your kind of elevator pitch, or?
That's a good question, because we find ourselves in between the two efforts. So when you look across the United States, there have been investments on two fronts in terms of diversity and inclusion in tech. On one end of the spectrum, you see more of a push to support and invest in Black and Latinx and women founders of startups. On the other end of the spectrum, there's a push to do more hiring in the corporate ranks, on board of directors and the executive teams and, you know, technical teams and the like. We see that there's a tremendous opportunity right in the middle, by taking these operating companies that in many cases minimize the risk from a true startup launching from zero, that can still produce some of the benefits of a successful tech exit. So I think there's this stratification of investment on the front end of companies that will likely have high attrition. And on the other end of the spectrum, they're completely focused in on hiring into organizations where the culture to some degree is still broken. And neither one of those is going to work by itself. There needs to be a middle option, and that's what we've been focusing in on in bridging this entrepreneurship, intrapreneurship, straddling that line.
Got it. Okay, good. I feel like, you know, in another convo, the opposite of the fast growth of wealth, but the real estate side, and in Durham, ironically, it was like, hey, the city would love to see more, you know, small spaces. I've got an empty whole huge space right here. So I'm like, what can I do with it? Mm-hmm. And the people that were in the conversations were like, basically rich white developers, like, hey, and they didn't say diversity. They just said like less expensive. So for actual urban entrepreneurship and urban small business, not just another like super expensive WeWork with espresso.
Right.
And so I'm like, all right, how do we get that kind of thing going? I'd love to talk to you about that separately. Sure. Because I think that's could be kind of a win-win in terms of, you know, building out our community. But yeah, let's wrap up. I think, you know, I don't even know how, like, I just keep thinking of this thing, like Nobel Prize winning Doug Speight. I don't know how Nobel Prizes work or like what they give them out to. It's always kind of random, but I'm like, this is like so game changing. So like when it works, it's worthy of many accolades. And I totally wish you best of luck, and I hope I can help you any way I can along the journey. And yeah, that's all I have. You have any sort of closing thoughts?
And just to, you know, one, thank you for the invitation. I really value every opportunity I have to speak with you, Nick. And I do see a opportunity to create entirely new ecosystems of support in this entrepreneurship, intrapreneurship category that we're creating. So I look forward to working with you on that going forward and seeing what this yields.
Awesome. All right. Well, thanks for your time today.
Absolutely.
Talk to you soon, Nick.